Hi, beginner investors. Welcome back to TechMoneyAI. Today, we're diving into something essential, something that every beginner needs to know: the basics of investing. Ever wonder how some people build wealth over time while others struggle? The difference is understanding how investing works and knowing where to start. Stick around till the end, because in this video, we're going to cover the essentials: stocks, bonds, ETFs, diversification, and how you can use AI tools to make smart choices. By the time we're done, you'll feel confident enough to take your first step in investing. Let's get started. Alright, so let's start with the basics. What exactly is investing? Investing is essentially putting your money to work to make more money over time. Instead of leaving it in a savings account, where it might grow just a little, investing allows you to potentially earn higher returns. The goal? To build wealth over time. Investing isn't about getting rich quick. It's about growth and patience. And here's where it gets exciting. There are many different ways to invest, each with its own risks and rewards. Let's look at some of the core types of investments. First up, let's talk about stocks. When you buy a stock, you're essentially buying a small piece of a company. Stocks represent ownership in a business, and as the business grows, so does your investment. Think of it this way. If you buy a share of Amazon or Apple, you own a tiny part of that company. If the company does well, the value of your share usually goes up. If the company struggles, the value can go down. Stocks are known for their potential to grow over time, but they can be volatile in the short term. So they're best for people who can handle some ups and downs and want to invest for the long haul. Now let's talk about bonds. Bonds are a bit different from stocks. Instead of owning a piece of a company, you're essentially lending money to a company or the government. Here's how it works. When you buy a bond, the issuer, whether it's a government or a corporation, agrees to pay you back with interest over time. Bonds are considered safer than stocks because they promise fixed returns. But that also means their growth potential is lower. So, think of bonds as a more stable investment that can add balance to your portfolio. They may not grow as quickly as stocks, but they offer more security. Alright, let's move on to a very popular option for beginners: ETFs, or exchange-traded funds. An ETF is like a bundle of different investments, such as stocks and bonds, all in one. It's like a smoothie with multiple ingredients mixed in. For example, if you buy an ETF that tracks the S&P 500, you're investing in 500 of the largest companies in the US all at once. This gives you instant diversification, which can help reduce risk. ETFs are easy to buy and sell, just like stocks, and they often have lower fees than buying each stock individually. This makes them an excellent choice for beginners who want a simple way to diversify. Speaking of diversification, this is one of the most crucial concepts in investing. Diversification means spreading your investments across different assets to reduce risk. If one stock or bond doesn't perform well, the others might balance it out. Think of it as not putting all your eggs in one basket. Diversification helps protect you from losing everything if one part of your portfolio struggles. With a diversified portfolio, you're less likely to experience extreme ups and downs. And here's where AI can make things even easier. Now, here's the cool part: using AI to make investing simpler. There are AI-powered tools and robo-advisors that can build and manage a diversified portfolio for you. They assess your risk tolerance, investment goals, and recommend a balanced mix of stocks, bonds, and ETFs that fits your profile. For example, tools like Betterment and Wealthfront can automatically create a portfolio based on your preferences, rebalance it as needed, and even reinvest dividends. They make investing easy and help you stick to a strategy without needing constant adjustments. So, if you're excited to start investing but don't know where to begin, consider an AI-powered tool. Many of them allow you to start with just a small amount and gradually increase over time. They offer features like goal setting, automatic contributions, and even tax optimization. It's like having a financial advisor in your pocket, but at a fraction of the cost. If this sounds helpful, don't forget to hit that subscribe button for more tips and insights on how to invest better with the power of AI. Here at TechMoneyAI, we're dedicated to helping you succeed on your investing journey. Alright, so here's a quick recap of what we've covered today. Stocks give you ownership in a company and potential for high returns, but come with more risk. Bonds are safer, providing steady interest, but usually lower returns. ETFs offer diversification by grouping multiple stocks and bonds into a single investment. Diversification helps reduce risk by spreading your money across different assets. AI tools simplify investing by creating automated, diversified portfolios tailored to you. These are the building blocks of investing, and once you understand them, you're already ahead of most beginners. Remember, investing doesn't have to be intimidating. Start small, be patient, and use the tools available to you. AI has made it easier than ever for beginners to get started without needing to be an expert. Whether you want to build wealth for retirement, save for a big purchase, or just grow your savings, investing can help you achieve those goals, and you don't have to do it alone. Thank you for joining me today on TechMoneyAI. I hope this video has given you the confidence to take that first step in investing. Let me know in the comments if you have any questions or if there's a specific topic you'd like to see covered. And remember, to invest better with the power of AI, make sure to subscribe to TechMoneyAI and turn on those notifications. See you in the next video.